Hello, hello. It's Mary Bartos with the Bartos Group of Premier Plus and my trusty friend who is back.
Cheryl Stokes, New American Funding. How are you today?
I am good. And Cheryl, hey, it's that time of the month where we're doing our housing update. So super stoked and excited. Let's go ahead and just dive in to see what's happened, in the last month.
Sounds good.
From a standpoint of this is March 2022. Sorry about this, Cheryl. My configuration is changing a little bit. One of the things that we found that we keep asking, folks are asking us about is what's going to happen? Is there a slowdown? When can I jump in? So if you'd be so kind to read what Altos Research is saying, I'd appreciate it.
I sure will. So, a quote, we keep watching for it, but there are absolutely no signs of a market slowdown anywhere in the data. If anything, we're seeing the market continue to heat up, and I would wholeheartedly agree with that.
Likewise, it is down here in Southwest Florida, which is where we are. It is just really honestly moving faster. And we get this question a lot. And one of the things why we get it is, they think that there's going to be, it's like last time. That's part of it. But in reality, look at this, Cheryl, of active listings drop again. Now, this is nationwide, not here in Southwest Florida. We'll share that with you later. But look at where February is.
It's remarkably low.
Yeah. And this is based on, this source is coming from realtor.com. This is based on the last 15 months. So unbelievably slow from that perspective. The other thing is, this is kind of interesting, Cheryl, when I saw this slide, because we're selling more homes.
Mm-hmm.
And we don't have any inventory. How is that? How is it that we're selling more?
I think we probably always maintained a level of extra homes for sale that weren't in demand, and we're selling more, and that's why the inventory is low, and we don't have that buffer built in that we used to have.
Yeah, we're going to show a slide with that. That is exactly the case. Here it is. The changing composition of active listings. As you can see from August of 2021. Now, these are nationwide, again, realtor.com stats. But you can see that in green is the carryover from the previous month. Mm-hmm. There was, and this is nationwide. So let's think about this. In our area, their spring, summer is like our winter/fall winter, right? We start ramping up into those first 2 quarters of the year. So the numbers could be in inverse for us. But this is interesting, isn't it, Cheryl, from a standpoint of, look at the carryover in February.
Right. Just 1 month. Just one month, the difference.
Yeah. And you can see it ramping down, which to me is like unbelievable from a standpoint. So this is another one that I really, really love that I wanted to share with you. Is it slowing down? What's happening? Well, the pessimistic actual forecasters, and this one was, by the way, done by I get my glasses on, Cheryl. Who did this source?
Home Price Expectation Survey.
You're leaning in, I'm getting glasses. Crazy. They grouped their forecasters into 2 different categories, one from a pessimist and one from an optimist. And this is over a 4-year period, from 2022 to 2026, 4 years. The interesting part is everybody's going up. There's nobody going down. And if they're pessimistic, it was maybe 5%-ish year over year. And our optimists are what, Cheryl, 16, 17% year over year?
Yep. So, and listen, at the end of the day, even on the pessimistic side, it's a great return on your investment.
I can't get that,
right.
In a safe place to put it. Now, if you get in the stock market or Bitcoin or whatever, and you're willing to take that risk, sounds great. But real estate has notoriously done better than all the other, vehicles.
Over time. Yeah.
Over time. So, let's go down again. Is it going to go down? We get this question. I get this question all the time. How about you, Cheryl?
I get it almost every day.
Exactly. And probably, if not multiple times a day. So worries about the housing bubble shows that the consumers are 77% worried. How do you feel? Do you think that number's right?
I think that number is right based on the questions I get. They are all concerned that they're buying at the top and that there's going to be a crash and they will lose that investment that they made at the top. Yeah. And I spend a lot of time explaining why we don't think that's the case.
And probably 3 out of 4. That's basically what this is saying.
Probably, yeah.
And the agents, are the agents a little more bullish?
I think they're a little bit more bullish, but even some agents just aren't sure. Some weren't around then, but they've heard the horror stories, and they just don't have that long-term perspective. But they're a little more bullish than the consumers are, for sure.
Yeah. I would say, agents that aren't informed, that aren't listening to the analysts, that aren't going out, we're seeing roughly 50% of them, having those concerns. And in their negotiations, we're seeing them as well. Or they're telling us silly things like, I had one the other day, Cheryl, it's a de-escalation market. The market is descending. I thought, well, maybe they're, and the agent that he was talking to said they said it 4 or 5 times. I thought, wow, well, that's an interesting concept. So foreclosures, are those surging, Cheryl?
They are not surging. They are very much back into pre-COVID territory, and they're in fact going down. They are less than 2% overall nationwide. That's a very, very, very low number for foreclosures. We're in great shape from a perspective of, are people able to stay in the homes? Are they willing to walk away from homes, which was part of what happened in the past? And people have equity, people have value, they're not walking away, and everybody caught up from COVID.
And the houses have appreciated.
Exactly. And that is one of the reasons that led to no foreclosures, being able to get caught back up. They've got more value.
Yeah, for sure. So not the same as last time.
Not the same.
Inventory of homes, not the same as last time. This is 7, 8, 9, and 10. You can see this is, really kind of a crazy thing. I got to put my glasses on. National Association of Realtors, looking at those 4 years of the housing crisis. Look at ours. We just don't have enough.
We don't have enough months supply. And I know you've heard me say this many times before. Not only do we not have that supply, but that we have 13 million more households in the United States since then, which is helping lead to that higher demand. We have more people wanting homes, and therefore a lower inventory.
And that next generation, right, Cheryl? That's driving that up.
Exactly. There are more of them than there were the baby boomers, and their demand is going to remain high for quite some time.
Yeah, right. So again, not the same as last time. And then again, just if you didn't get this, the first 3 slides that we talked about it, here's another one coming in.
Exactly. Look how low we are in 2021. 2022 is already looking to be lower, and it is lower, the lowest in history. Look at 2005 to 2021.
Yeah, just in my perspective, just crazy, crazy, crazy. So let's talk, Cheryl, about something. Forbearances, same concept. I know we're driving this point home, but talk about forbearance. For those of you that don't know what it is, Cheryl, go ahead and share that.
Forbearance is where someone has reached out to their lender and asked for help because for whatever reason they cannot make their payments. We saw some forbearances claimed during COVID. That was an unusual situation. They went up. The real concern was, would they be able to come back out of forbearance? Would this start a downturn in the market? And again, virtually all of them have come back out. They've made it back out. They've either repaid or entered into a payment plan, and forbearances are also very low, back to pre-COVID numbers. So we don't see that as a problem area either.
forbearance, foreclosures, getting through the process is unbelievable. So, what's near and dear your heart, Cheryl? Are interest rates. And are we getting those questions? Of course we are.
We are definitely getting questions about interest rates.
Yeah. So I found this particular side rather interesting when I was looking at it. When you look at the, 70s, the 80s, the 90s, I bought my first home in the mid 80s when interest rates, I must have got a bad deal, Cheryl, because I think oh no, I'm right on spot. My interest rate was almost at 14%.
Mine was 13. Yeah, I'm
Yeah.
looking at it right there.
And then my second one was 10%.
Yep. Then they went down to the sevens, but then they started going back up again. Yep.
Yeah. So how is this tying? Because I thought this was an interesting slide, that it's tying it to the treasury rate.
It tends to have the same trend, but we also have some extra factors right now that are moving into rates. We do have the inflation and the Fed trying to potentially taper and cool inflation. We do have the extraneous things like the war in Ukraine going on. So we're not sure if that trend is exactly going to match this graph as it has in the past. But suffice it to say that rates are on the rise. They are going to be on the rise. We expect another increase, but they are still historically low. They're still in historically low territory.
Right. I mean, it's crazy. And then, thinking about this, Cheryl, if you look at home sales through the years, again, 80s, 90s, 2000, et cetera, with interest rates, we haven't seen those home sales impacted by the rise of interest rates.
No, if there is demand, the interest rates do pose, or an increase in rates do pose some extra work on the lender side and the buyer side as far as getting them qualified. Maybe their buying power changes some, but there's still demand for homes. People need to downsize, they need to relocate, have growing families. There's always still a demand for housing. And the other interesting thing here is not only are home sales not impacted by rising mortgage rates, we were just talking about the treasury, et cetera, and inflation. And the other trend is that during recessionary times, we also don't lose home sales.
That is a key point. We get a lot of people that are saying to us right now, inflation, 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 war, mortgage rates, we're going to drop. Those are probably all the
Right.
questions we're getting.
Right. Housing has historically stayed strong through recessionary years. So given this slide and that fact, I think we can expect it to stay strong. We'll just, live with the rates as they are. Again, they're still historically low. It's not going to prevent people from buying. It's still a good time to buy. At the end of the day, we all know it's a safe investment to buy a home and build that equity. And that's a great way to build familial wealth, by building that equity in a home that's safe, secure, and it's also a hedge against inflation. We need to remember that rentals, you might as well call them 100% interest, because you're not receiving any equity or any value out of what you're paying. Number one, They are doubling and tripling in their cost. And housing is one of the biggest pieces of your expenses and your cost of living. Well, if you can hedge that inflation by fixing your housing payment, then that helps you deal with all the other stuff around you that maybe we have a lot less control in.
I love that. I love another thing, Cheryl, that one of the agents on our team said, longtime agent in the business, said, if you're going to wait to invest for whatever reason, conflict, concern about interest rates, concern about what, and put your plans on hold, they're always going to be on hold, because we're always going to have something.
Yes, there's always an outside factor. So at the end of the day, it's really about your personal finances. what can you afford? What can you do? And at some point, you just have to get in. That's just like saying, I'm never going to invest any of my cash. I'm going to let it sit here. Well, it doesn't grow if it sits.
Yeah.
Right?
Yeah.
You invested in some instrument that helps it grow. And one of the safest I can't even speak, instruments is home purchasing.
Yeah, without a doubt. So let's kind of go down this path. What's happening locally, Well, you saw the slide before, and maybe I should have put them up side by side. That might have been interesting, Cheryl, about changing composition of active listings each month. So at the top, we've gone from roughly, what is that, 2,200 homes for sale down to around a little under 1,500 since August in Southwest Florida. This one specifically, the Naples area. But look at that changing of new carryover listings from the previous month. So nationwide, we're on par with what's happening. We may be inverse a little bit because we started to see new listings come up, and they were seeing new listings go down because their winter is, is when they're not hot, and we're hot in our winter time. So you see that between December and January, how they bumped up for the new listings, but the carryover has just gone significantly down, which is incredible. Now, look at this, Cheryl. Total home sales in the Naples market that have dropped.
Yep. It just continues to trend downward. We got our January bump that we always get at the beginning of our season, but it's just continuing to trend downward. The homes are being snapped up as soon as they enter the market.
That's right. And we're on par with what they said. Home sales have gone up. Inventory's gone down.
Mm-hmm.
We're just at the nationwide level as well. We're live here on Facebook. So if you have a quick question and you want to post it, feel free to. We're almost at the end of this time. But one of the things I wanted to leave us with on these stats are new listings are down by, in the last year. InfoSparks is the Naples Board of Realtor. InfoSparks reports on this from the last slide and this one, down by 12.7% for new listings. Homes for sale are down by 65 almost percent. But look at the average close price, Cheryl, up by 37%. And I will tell you that in certain of our markets from October, November to today was 25, 27%. We had a normal summer last year because people were traveling about. But we just can't keep inventory on the shelves, and we are still selling. So, Cheryl and I always say, is it time to move? It's kind of the last slide. That's a question. Is it time?
I think it's still time. I think it's a great time for sellers to take advantage of the increase in the market. It's still a great time for buyers to get in because although home prices are changing, there's still growth to be had. And the rates are still historically low. People can still afford to buy. I don't have anyone that right now that I'm working with that can't get into the market at the rates that we have. And I remind people often that our rates are the same as they were in 2018. So, we had a couple years there, call it a gift, but really we are historically low, well beyond our average that we have been over time. So it's still a great time to get in and have the opportunity to build that growth.
It's interesting, Cheryl, because you do a lot of your business not in refi. You do a lot of
exactly
business. But I think it was on CNBC today that refi business is down by maybe 54%, roughly.
It is.
So, which that's shocking. Headlines are meant to shock, not to clarify the situation. And when you think about that, it looks like, oh my gosh, nobody's buying a house. No, that's not the case. Our sales are going up. It's just refi is coming down. The money's not as cheap as it was.
Right. And, even though some people are saying that the refi market is also still not a good one, and they have come down, that rush to get those rates. But even at the rates that we have, based on your personal finances and your situation, there are still smart refinances to be had as well. Because again, home buying, home selling, financing, it's all part of a big picture financial plan. And sometimes it still works for you and your financial plan and your long-term goals, regardless of what the rate is. It's still a good tool. Just like the talk about hedge in inflation. If you have credit cards that are exponentially rising in this time, a refi in the fours is still great. It really means you have to talk to a trusted advisor, a realtor who can help you buy or sell, and a lender who can help you determine what the best long-term goal is for you financially regarding homes, not financial planning, but regarding homes. And it just goes to show that the rates they're just a tool. And how do we use that tool to our best advantage?
Well said. Well, Cheryl, March, I'm anxious to see what happens in
April.
We're always reporting a month after, right? So, we're talking about what happened in February. But until next time, my friend, I'm Mary Bartos with the Bartos Group, and you are?
Cheryl Stokes, New American Funding.
And we look forward to seeing you here in Paradise, selling and buying to, pick your piece right here. We'd love to see you. Ciao.